to speak to what is it that we have in place after what we've had, and ideally what we need so that we can have an effective system. What is it that we have in place? We have a private voluntary arrangement scheme in place. I wouldn't call it a retirement system, because the system we currently have in place is not aimed at ensuring that every working Namibian has income replacement after retirement. Had that been the intention, we would have a compulsory enrollment scheme. That's not what we have. What we have depends on an agreement between an employer and their employees. If they so agree that they will defer some of the remuneration as today, so that we can provide an income when the person has reached retirement age. Now, that also explains the coverage that we have. The current system, as using the figures from December 2021, gives about 43% coverage of the formally employed. So about 57% of people who are classed as formally employed are not contributing to pension scheme or making savings for retirement. Now, is the system adequate for those who are lucky enough to be or to belong to a pension fund? Two main issues with the current system. There is no set minimum contribution rate, as we just heard from Sarah. That's critical in ensuring adequacy. There is also no protection of these savings. What do I mean there's no protection for these savings? I'm trying to avoid a term that usually lights up fires. So what happens with our system is that every time you change jobs, you can cash out. So with the average service today being at about 3 to 5 years in a job, it means a person who starts work at the age of 23 changes jobs every 5 years. Every 5 years they get to cash out and start over. There is also no requirement that these savings should be used at retirement, should you be lucky enough to have remained in the same job, not cashed out, diligently saved when you reach the age of 60. There's no requirement that this amount actually goes toward ensuring that you have a sustained income in your retirement. You can cash it out on the day you turn 60 and go have a blast. With the experience of COVID, what we have discovered is that usually, for those of us lucky enough to have pension savings, it is usually the only kind, it's the only regular and long-term savings that we have. So what has happened is when people were required to take salary cuts, there was pressure on the system, because to maintain the same standard of living, or simply to maintain a basic standard of living, make the car payment, make the home loan payment, there were no other savings available. The only savings that were available were those sitting in the pension fund. And this puts pressure on the system, because then people demand, I need access to my money because of what's happening today. So what does the future look like? And when I say what does the future look like, I'm actually looking at the immediate future, and I'm looking at what it is that has been expressed in terms of the policy intentions that began from the FEMA bill. The FEMA tries to address two aspects. One aspect is adequacy, and that is by securing savings that have been accumulated and trying to ensure that they are available at retirement and not accessed prior to that. Also, it brings in a change of actually requiring that once we reach retirement age, that the funds actually are used for regular sustained income in retirement and not a lump sum. Now, there are other aspects of our regulatory framework that could help bolster the system. The one the one main component will be the National Pension Fund, which would then, of course, be a mandatory enrollment scheme for all of us who are paying for Social Security or formally employed. And then also, but the issue will still be that these, what we can see in the policy today, will actually not address all our issues. They will not address the issue of adequate provisioning. We still have to set a contribution level that gives an adequate level of savings. As we are seeing from the data currently, we are hugely under-saving. Even those of us who are saving, we are under-saving. Also, we need to strike a balance between today's needs and tomorrow's needs. Because a pension scheme cannot, or a pension system cannot be divorced from the society within it exists and the socio-economic needs of that community. And then another key factor that we probably need to start thinking about today is how do we encourage people to save? There has been a move internationally, which is to, since most people are used to, or at least those of us already in the system, are used to having this deduction go off our salary before we even see the income, it might be easier to kind of bring in a mandatory savings scheme where the contribution that comes from the salary is split. There's a portion that is for retirement and is protected, and there's a portion that can be accessed. Now, we have seen different versions of this. For example, the South African two-pot system. The proposal in South Africa is that you have the 2/3 that are locked in that are for pension, and then you have the 1/3 that you can access once every year. So it basically acts like a savings account that you can clear out once every year. And with the South African proposal, actually, it's open. There are no restrictions. But we've seen everywhere in the world, like for example in Mexico, they have a system where you have a savings component, you have a pensions component, but what you can only access your savings component once every 5 years and only in cases of unemployment. So it's restricted access. So maybe those are the options that we can look towards achieving a sustainable pension system, and that is my little bit for